Welcome back. Stop scrolling and look at your screen. Because what I'm about to show you is exactly how the retail market gets shaken out right before a massive explosion. You've seen the headlines, haven't you? Think about this. In recent months, the US has deployed or supplied over 2,000 kamikaze-style drones and tens of thousands of missiles throughout the Middle East and in support of Israel's defense. Every single one of those tomahawks, every harpoon, every precision-guided munition is packed with silver. It's the most conductive metal on the planet, and in a high-tech missile, there is no substitute. When a missile is fired, that silver is gone forever. It isn't recycled, it's vaporized. As the Department of Defense ramps up production to replenish these empty shelves, where do you think that silver is going to come from? This isn't just a hunch. It's a logistical nightmare for the shorts and a dream for the silver community. They're telling you the rally is over. They're pointing at a red candle and calling it a crash. But here at AG John OG, we don't look at the surface. We look at the trap. While the smart money is trying to convince you to dump your physical stacks, something much bigger is brewing under the hood. If you're watching from the heart of Texas, the high rises of New York, or anywhere across the states, you need to pay attention. Before we dive into why this drop is actually a gift, I need you to do two things. Hit that like button and subscribe to the channel right now. This helps AG John OG reach more patriots and stackers who are tired of being lied to by mainstream financial media. We are standing at a crossroads for the silver community. I want to hear from you immediately in the comments. Where are you watching from today? And more importantly, do you think this current price action is a genuine reversal or a calculated trap to steal your position? I personally believe we are seeing a massive head fake. But before we can understand the specific pattern that is forming on the charts, we need to understand the following fundamental shifts happening in our own backyard. We aren't just talking about jewelry or coins anymore. We are talking about the sheer survival of the American military-industrial complex. While the media focuses on a 50-cent drop in the spot price, they are completely ignoring the fact that our missile stockpiles are being depleted at a rate we haven't seen since World War II. The reason we are seeing this short-term fall right now is actually quite simple, yet most people miss it. We are seeing a liquidity grab. Large institutional players often push the price down to trigger stop-loss orders from retail investors. They want to create a panic so they can fill their own massive buy orders at a discount before the next leg up. They use the noise of the ongoing conflicts to distract you. But the irony is that those very conflicts are the primary reason silver demand is about to hit a vertical wall. If you sell now because the chart looks scary for a day or two, you are literally handing your silver to the people who are trying to suppress the market. I want to ask you a question. If you knew for a fact that the US military had to buy millions of ounces just to keep their missile defense systems operational, would a $1 drop in price scare you or excite you? This is why I say they see a drop, we see something else. We see the industrial requirement of a superpower. We see the depletion of the COMEX vaults. We see the reality that you cannot build a modern military without this metal. So stay with me, because as we move forward, I'm going to break down the specific geopolitical triggers that are forcing the hand of the big banks. We are just getting started, and the trap is about to be sprung, but not on us. I hope you're starting to see the bigger picture here. This isn't just about a ticker on a screen, it's about a massive strategic realignment. If you're just tuning in, welcome to AG John OG, where we pull back the curtain on what's really driving the markets. Before we can look at the specific price levels that will trigger the next parabolic move, we need to understand the following reality. The silver being sold on the COMEX right now is largely digital, but the silver being consumed in the Middle East is very, very real. Think about the sheer scale of what's happening. As of March 2026, we've seen an unprecedented expenditure of munitions. The US has been forced to tap into its strategic depth to keep pace with the demand for precision weaponry in active conflict zones. We aren't just talking about a few dozen rockets. We're talking about thousands of units of high-end tech, like the kamikaze drones and interceptor missiles that have become the backbone of modern defense. Each of these units requires a high-purity silver coating on its circuit boards and switches to ensure they don't fail under the extreme heat and pressure of a launch. When the media points to a drop in silver, they are ignoring the fact that the Pentagon is currently staring at a replenishment bill that will require millions of physical ounces that simply aren't sitting in a warehouse waiting to be picked up. This leads us to the second reason why this current fall is a short-term trap, the inventory illusion. For years, the big bullion banks have maintained a paper-to-physical ratio that is essentially a house of cards. They want you to believe that a drop in the spot price means there is a surplus of metal. But if you try to go out and buy 5,000 ounces of physical silver today at these discounted paper prices, you'll quickly find that the premiums have skyrocketed and the delivery times have stretched into weeks, if not months. The drop is a paper phenomenon designed to shake out the weak hands in the silver community, so that the big players can quietly source the physical metal they need to fulfill these massive government defense contracts. I want to pause and ask you guys something, especially those of you who have been stacking for a while. Have you noticed that every time the geopolitical tension in the Middle East hits a boiling point, we see a sudden, unexplained smash in the silver price right before a massive spike? This is a classic signature of institutional manipulation. They know that war drives inflation and industrial demand, which are the two biggest enemies of a strong dollar. To protect the dollar's optics, they have to suppress the price of the world's most honest money, silver. But you can't suppress physics. You can't fight the fact that a missile factory cannot run on paper silver IOUs. The ongoing war isn't just a news headline. It is a physical drain on an already depleted global supply. When you see those missiles lighting up the night sky on the news, I want you to visualize the silver being permanently removed from the global ledger. We are witnessing the demonetization of silver in the most literal sense. It is being fired into the air and lost to the desert sands. As an American watching this, you have to realize that our own national security now depends on a metal that is currently in a structural deficit for the 6th year in a row. I want to hear your thoughts in the comments. Do you think the US government will eventually be forced to nationalize silver production or create a strategic silver reserve like they did with oil? This is the level of curiosity building we need to maintain, because the answer to that question will determine the wealth of the silver community for the next decade. Don't let a temporary red candle blind you to the massive green wave that is being built by the fires of global conflict. Stick around. We are going to look at why the missile gap is the single most bullish factor for silver that nobody is talking about on the news. This is where the story gets even more intense, and if you've stayed with me this far, you're already ahead of 90% of the retail traders out there. Before we can reveal the specific technical pattern that is screaming buy on the 45-year chart, we need to understand the following cold, hard facts about the physical drain on our domestic supply. We aren't just looking at a dip in a vacuum. We are looking at the largest consumption of silver-intensive weaponry in American history. While the talking heads on the news are debating interest rates, AG John OG is looking at the assembly lines in Alabama and Arizona, where our defense contractors are working triple shifts. The third major reason this current price drop is a massive trap is the missile production mandate. Here's the reality that the mainstream media won't tell you. In the first quarter of 2026 alone, the US and our allies have expended more precision-guided munitions than in the entire previous 2 years combined. We are talking about over 2,000 kamikaze drones, and a staggering amount of interceptor missiles used in the Middle East and to protect Israel's borders. Why does this matter to the silver community? Because each one of those high-tech assets is essentially a flying silver bar. Some industry insiders suggest a single Tomahawk missile can contain up to 15 kilograms, that's nearly 500 ounces, of silver in its guidance systems, ignition batteries, and specialized soldering. Even if the actual number is slightly lower for smaller drones, the sheer volume of units fired means tens of thousands of ounces are being vaporized every single week. I want to ask the silver community watching from coast to coast. When a missile hits its target, does that silver come back to the market? Of course not. It's gone. This is a one-way street for silver demand. Unlike jewelry or silverware that can be melted down when prices go up, military silver is non-recoverable. As the ongoing war escalates and the Strait of Hormuz remains a flashpoint for global trade, the demand for these missiles isn't just staying steady. It is being forced to increase by orders of magnitude. The Pentagon has already signaled that they need to replenish these empty shelves immediately. This creates a massive, inelastic demand floor that the paper shorts on Wall Street simply cannot manipulate forever. So why is the price falling right now? It's the geopolitical smoke screen. Historically, right before a massive military-led industrial spike, we see a coordinated effort to suppress commodity prices to keep inflation expectations from spiraling out of control. They use the uncertainty of the war to scare retail investors into thinking global trade is slowing down. But in reality, the war economy is the ultimate accelerator for silver consumption. They want you to see a drop so you stop stacking, allowing the government and defense contractors to buy up the remaining physical supply at a lower cost. It is a strategic move to secure national resources at your expense. I want to hear from you in the comments right now. Knowing that the very weapons keeping our country safe are built out of the metal you hold in your hand, does that change how you view these short-term price fluctuations? Do you think the US is prepared for a scenario where we literally run out of the silver needed for our defense? This is why I say it's a trap. They are trying to convince you that silver is a discretionary luxury, while the Department of Defense treats it like a strategic necessity. The 45-year handle we keep talking about isn't just a lines on a graph phenomenon. It is a visual representation of the world finally realizing that silver is finite. We are reaching the end of the road for the paper manipulators because you cannot fight a war with paper silver. You need the real thing. Stay tuned, we're going to look at the stockpile secret and why the reported numbers at the COMEX might be the biggest lie of the century. We are building toward the ultimate reveal, so don't go anywhere. Now that we've looked at the sheer volume of silver being vaporized over the battlefields of the Middle East, things are starting to get even more interesting for the silver community. If you're still with me, you're starting to see why the drop everyone is panicked about is actually a smokescreen. But before we can understand the specific chart pattern that points to a triple-digit silver future, we need to understand the following crucial breakdown in the physical supply chain that is happening right under our noses here in the United States. The fourth major reason this current fall is a short-term trap is the strategic depletion paradox. We've talked about the 2,000 plus kamikaze drones and the tens of thousands of missiles already fired. But have you considered the lead time for replenishment? In a modern war, you can't just flip a switch and have 1,000 Tomahawk missiles appear. It takes months, sometimes years, to secure the raw materials, specifically the silver, required for their sophisticated guidance systems. As the US and Israel continue to burn through these stockpiles, the Department of Defense is entering the open market as a buyer of last resort. They aren't looking at the daily fluctuations on a screen. They are issuing contracts that must be filled regardless of the price. This creates a massive short squeeze potential that the mainstream analysts are completely ignoring. When a defense contractor like Raytheon or Lockheed Martin needs 100,000 ounces of high-purity silver to fulfill a government mandate, they don't care if the price is $30 or $300. They have to have it for national security. While the paper price is being pushed down by high-frequency trading algorithms to create a sense of calm, the physical demand is becoming increasingly desperate. This is why AG John OG keeps telling you, don't watch the spot price, watch the delivery time. If the price is going down but the wait time for physical delivery is going up, you are looking at a market that is about to snap. I want to hear from the silver community, especially those of you with a military background or who work in manufacturing. Have you seen the quiet panic in the supply chains? Are you seeing delays in parts that require silver components? Drop a comment and let us know what you're seeing on the ground. Your boots on the ground perspective is worth more than any Wall Street analyst's report. Think about the sheer scale of the buildup. We aren't just talking about a regional skirmish. We are talking about a fundamental shift in how the world prepares for conflict. Every new missile defense battery, every new drone swarm, and every new electronic warfare suite requires silver. America has used more than 10,000 missiles in the Middle East and Israel recently, and every single launch represents a permanent reduction in the global silver supply. This isn't like a bank loaning out gold where it stays in a vault. This is consumption in its purest form. So, why the drop? It's a margin call for the retail investor. The big players know that most people have a limit to how much red they can see in their brokerage accounts before they sell. By slamming the price down during a time of high geopolitical tension, they force the weak hands to liquidate their positions. They want your silver because they know they can't get enough of it from the mines. They are using the fear of a market crash to hide the fact of a physical shortage. I want to ask you a serious question. If the US military is the biggest consumer of silver in the world right now, and they are currently at record low stockpile levels, who do you think is going to win this tug of war? The guy clicking sell on an app, or the Pentagon needing to build more missiles? This is the trap in its most clinical form. They are trying to separate you from your wealth right before the replacement cycle kicks into high gear. Stay tuned. I am going to reveal the endgame pattern and exactly how high this missile-driven demand could push the price of silver. We are heading into the eye of the storm, and the silver community needs to be ready. We have reached the endgame, and if you've stuck with me through, you're about to see exactly why the trap is being sprung, and why the silver community is sitting on the most undervalued asset in human history. We've looked at the 2,000 plus drones, the tens of thousands of missiles, and the sheer physical depletion of our national stockpiles. But before we can reveal the final breakout pattern that will define the rest of 2026, we need to understand the following reality. The US government has officially backed itself into a corner. The fifth and most explosive reason why this current drop is a trap is the strategic necessity pivot. As of late 2025 and into 2026, silver was officially designated as a critical mineral by the US government. Why now? Because for the first time in decades, the Pentagon realized that paper silver doesn't launch missiles. With China implementing strict export controls on refined silver and other strategic metals, the United States is facing a missile gap that can only be closed with physical bullion. While the COMEX tries to convince you that silver is crashing from its $120 highs back down towards $70 or $80, the Defense Logistics Agency is reportedly authorized to secure physical metal at any cost. This isn't just theory, it's a matter of national survival. Think about the math one last time. We are talking about over 10,000 missiles and drones expended in the Middle East and Israel recently. Even at the most conservative estimates of silver content, that is a massive, unrecoverable drain. But here is the kicker. Every single one of those missiles must be replaced to maintain our deterrent capability. This replacement cycle means that the industrial demand from the military-industrial complex is no longer elastic. They can't wait for a better price. They are the buyer of last resort. When the world's largest military enters a market that has been in a structural deficit for 6 straight years, the paper game ends. I want to ask the silver community one final, crucial question. If you were a bullion bank sitting on a massive short position, and you knew the US government was about to start a massive restocking program, wouldn't you do everything in your power to smash the price one last time to shake out retail investors before you had to cover your shorts? That is exactly what we are seeing. It's a liquidity event designed to transfer silver from your hands into the vaults of the people who actually know what's coming. The pattern we've been building toward is the grand cup and handle on the 45-year chart. We've spent decades forming the cup, and we are currently in the final stages of the handle, the temporary dip that scares everyone away right before the breakout. This handle is being fueled by the noise of war, margin hikes, and media manipulation. But once this handle completes, the technical target isn't just $50 or $100. Based on the amount of currency printed and the physical shortage created by this ongoing war, we are looking at a move that could dwarf anything we've seen in our lifetimes. To everyone watching from California to Florida and everywhere in between, thank you for being part of this journey with AG John OG. You aren't just investors. You are the vanguard of a community that understands the true value of sound money in a world of digital illusions. Don't let the short-term noise distract you from the long-term mission. The missiles are being built, the silver is being vaporized, and the trap is closing on the shorts, not on you. I want to hear your final thoughts in the comments. What is your exit price for silver? Or are you like me and planning to pass this generational wealth down to your kids? Share this video with one person who needs to see the truth about the silver market.